This is Zane Goldthorpe with ProWriters, and today we're going to discuss the history of cybercrime insurance. A common question agents ask about related to cybercrime is which policy should respond, the cyber policy or the crime policy? Also, is there duplicate coverage? And should their clients have both policies? Traditionally, cyber policies only covered the loss of data, not the loss of money. And when the claims started pouring in over 10 years ago for fraudulent wire transfers, the cyber policies did not respond, but coverage was sometimes found on broad crime policies. During that same time, we saw the beginning of social engineering losses start to take place, where people were tricked into voluntarily releasing funds to fraudsters. The common social engineering attack was when an employee would receive an email from someone who looked to be a regular trading partner, informing the person that they have updated their bank account information and to please wire their next payment to the new bank account address below. Oftentimes, the person would fall for the trick and voluntarily wire the money to what turned out to be a fraudulent bank account. When the insured started reporting these losses to their crime policy, the crime carriers argued that they did not intend to cover the voluntary release of funds and they denied the claims. Unhappy with this result, the insured started taking the carriers to court as they felt this should be covered under the computer fraud or funds transfer sections of the crime policy. The courts ruled in the insured's favor and their claims got paid. After the court's decision, the big insurers had to go back to the table and rewrite the wording in their crime policy. At this time, they created what was marketed as a major enhancement called the social engineering endorsement. Therefore, at renewal time, the crime policy included coverage for computer fraud, funds transfer, as well as the new social engineering endorsement. Very few people, however, realized that this was actually a case of exclusion by inclusion, as the carriers were sublimiting the new social engineering coverage to very low limits. Around this same time, the cyber markets realized that this is a coverage that should be included in a cyber policy, and therefore they started adding cyber crime coverages as endorsements to the cyber policy. Now, agents had to quickly get educated on what these new exposures were and try to determine the best policy to place them on. They also had to get up to date with all the different carrier appetites, as the limits being offered were all over the board and tough to compare. To make matters even tougher, we soon had yet another exposure arise where hackers would fraudulently gain access to an insured's network and send out fictitious invoices from the insured's email address to their clients. As the clients paid these invoices that looked to be legit, the money was going to fraudulent bank accounts as the hackers were altering the routing numbers on the invoices. To cover this new exposure, the carriers created yet another endorsement called Invoice Manipulation, and they added the coverage with sublimits. This chain of events has led us to where we are today, where cybercrime can be found in both the cyber policy and the crime policy, and where all the different carriers have different appetites and different sublimits for all the coverages. And while it is very difficult for agents to be able to keep track of the changing conditions, it is critically important that they partner with someone who can help them navigate these challenges, as these are some of the most frequent claims that clients will face. As for our original question, both policies could respond. There usually is duplicate coverage, and your client should buy both a cyber and crime policy. Having both policies fully protects your insureds and can sometimes provide them with additional limits in the event of a large loss. Cybercrime is one of the leading causes of loss, and the frequency of attacks continues to grow. Therefore, it is critically important as an insurance agent that you are educating your clients on this risk and offering them the proper protection. In our next training sessions, we will go into full details of the funds transfer, social engineering, and invoice manipulation coverage sections, but feel free to reach out to us at ProWriters anytime.